What if the next global economic superpower isn't China, but India? Over the past decade, India has emerged as one of the fastest growing major economies in the world. With a population exceeding 1.4 billion, rapid digital expansion, and strong government-backed infrastructure growth, global investors are now shifting their focus toward India. But investing directly in Indian stocks can be complex, risky, and time-consuming. So how do smart investors tap into this opportunity? Through ETFs. In today's video, we'll break down 3 of the best India ETFs, INDA, INDY, and EPI, and explain exactly how each one works, what they hold, and which one might be right for you. 1. Why India growth story matters. India's growth story is being driven by multiple powerful forces. First, the country is benefiting from global supply chain shifts as companies diversify away from China. Major corporations are increasingly setting up manufacturing and operations in India. Second, India's digital revolution is accelerating. With millions of new internet users every year, sectors like fintech, e-commerce, and IT services are booming. And third, India's young population gives it a long-term economic advantage with a growing workforce and rising consumer demand. All of this makes India one of the most attractive emerging markets today. 2. INDA, core market exposure. Let's start with INDA, the iShares MSCI India ETF. INDA is one of the largest and most widely used ETFs for gaining exposure to the Indian stock market. It tracks the MSCI India Index, which includes large and mid-cap companies. This means you're investing in a broad mix of India's most established and influential businesses. The ETF is heavily weighted toward financials, which dominate India's economy, followed by information technology and energy sectors. Top holdings typically include major companies like Reliance Industries, Infosys, and HDFC Bank, leaders in their respective industries. Because of its diversification, INDA is considered a core long-term investment for those who want stable exposure to India's overall market performance. If you're looking for a balanced and relatively lower risk way to invest in India, INDA is often the go-to choice. 3. INDY, high conviction large caps. Next is INDY, the iShares India 50 ETF. Unlike INDA, INDY focuses only on the top 50 largest companies in India. This makes it more concentrated and more sensitive to the performance of big corporations. The ETF has significant exposure to banking and financial giants, which play a central role in India's economic growth. Because it holds fewer stocks, INDY can be more volatile, but it also has the potential to deliver stronger returns during bullish market conditions. Think of INDY as a high conviction bet on India's biggest winners. If India's top companies continue to dominate and expand globally, India could outperform broader ETFs. However, investors should be comfortable with short-term fluctuations. 4. EPI, earnings-based strategy. Finally, we have EPI, the Wisdom Tree India Earnings Fund. This ETF takes a completely different approach compared to INDA and INDY. Instead of weighting companies by market size, EPI focuses on corporate earnings, meaning more profitable companies get higher allocation. This often results in a value-oriented portfolio with strong exposure to sectors like financials, energy, and industrials. Because of this strategy, EPI may outperform during periods when undervalued or fundamentally strong companies gain traction. However, it can also diverge from the broader market, meaning its performance may not always match traditional index-based ETFs. EPI is best suited for investors who want a smarter, fundamentals-driven approach to India investing, rather than just following market trends. So how do these ETFs compare? INDA offers broad diversification and is ideal for long-term investors. INDY provides focused exposure to top companies with higher risk and reward potential. EPI delivers a unique earnings-based strategy, targeting profitability rather than size. Each ETF represents a different way to capture India's growth story, from stability to aggressive growth to smart value investing. India is no longer an emerging opportunity, it's becoming a global economic force. And ETFs like INDA, INDY, and EPI offer a powerful way to be part of that journey. If you found this video valuable, make sure to subscribe for more deep dive investing content and drop a comment below. Which ETF would you choose? Because the biggest wealth opportunities often come from markets most people are still ignoring.